and CEO of Edelweiss Mutual Fund, joining us on the show right now. Hi Radhika, it's a special day for us. ET now is celebrating 16 years, and thank you so much for being the part for today and for so many years. Being an industry participant, you have always come to our channel to guide our viewers. So Radhika, firstly, let me start with the journey that mutual fund industry in India has seen. We'll not go back to 16 years, but let's take a decade. From like 8 lakh crores, see the size of a mutual fund AUM, which is now standing at 65 lakh crores. Radhika, give us some sense that as per you, what has been that inflection point for the Indian markets and especially for the mutual fund industry, which triggered such kind of a growth and which was supportive?
So firstly, congratulations to you, to the entire team of ET Now for completing such a long 16-year innings. I think the channel has done extraordinary work. We've had so many conversations on educating investors, talking about issues, and I really hope this is just the beginning and, you complete many, many more decades of doing good work to investors. So very, very excited for you guys. I think, yes, it's been a your 16-year period has coincided with a golden decade, I would say, for the mutual fund industry. 11 years of this government also being in power. And I think, as we look at the numbers, we're all surprised. I mean, 8 lakh crores of industry AUM to close to 70 lakh crores. But also, I think what is more interesting, and I'll dive into some of the reasons, is we've gone from maybe 4 crore folios to 23 odd crore folios. If you just look at mutual funds as a percentage of bank deposits, we've gone from 10% to 30%. More of the AUM has become retail. More of the AUM has become equity. More people are investing via SIP. More distributors are out there. So it's the development of the whole ecosystem. And I think a bunch of things have contributed to it. One is, I think, the confidence in the India story. Finally, when you're investing in equities, it reflects a confidence in the country, in the equity market. And I think, the growth of companies, the level of aspiration, the marketing on the India story has been very strong. The second, I think, is that digital access over the last 10 years has become, much, much better. It started from the time when we got Jan Dhan to enable broader access, and then so many digital initiatives that have happened. The whole growth of fintechs have now made mutual fund accessible to a much wider class of people across a much wider class of cities. So I think that has helped. And the third is a lot of effort by our own industry. For instance, Mutual Fund Sahi as a campaign to create awareness that happened in 17 really, I think, has made this instrument a household instrument. Of course, we have a long way to go.
Right. Radhika, hi, this is Ankita also joining in. Radhika, as a woman investor, someone who manages a fund that's more than 1.3 lakh crores, we want to know, both Srishti and I, we both are women investors, we want to know how do you manage your money? Because even according to data, women's participation in, mutual funds has more than doubled, since 2019. The SIP AUM has grown 4x. We want to know how do you manage your money, and that should, give us a lot of knowledge of how can we perhaps look at managing our own.
No, I think firstly, women's statistics across the board as far as financial inclusion and involvement have gone up. By the way, even the women bank account numbers are up to 80% from 50%. I was told 1 out of 4 now unique MF investors is a woman. In the case of our own AMC, that's probably 30% women investors. So this trend is moving. How do I manage my own money? It's very simple. It's very dal chawal in my own words. I think women make great investors once they understand the basics of investing. I look at my goals and I manage money according to my goals. I think 90% of my portfolio is mutual funds and mutual fund investments. And I really look at where I want to go in terms of 1-year goals, 3-year goals, 5-year goals, and my long-term money goes into equity, my medium-term money goes into hybrid funds, my short-term money goes into debt funds. But really, that's what it is.
All right. Thank you so much for that advice, Radhika. I hope a lot of people benefit out of that. But Radhika, now Now let's talk about the markets, because yes, off late the SIP numbers is growing up, the participation is also there, but there are redemptions also, and that's because the construct of the market post September, Radhika, we have seen the markets getting a little jittery. Now at this point in time, we are seeing the geopolitical tensions on the rise, there's trade war, and what else? The crude is also on the boil. Give us your reading on the markets, because I'm sure that the long-term investors will continue their SIPs. But for now, how do you see the construct of the market? Is it a time to now taper down your expectations from the markets post the run-up that we have already seen in the past 3 to 4 years?
So I said this at the beginning of 2025 that after a reasonably unvolatile time post-COVID and extraordinary returns, perhaps you should see 2025 as a year of returns consolidation. So taper down your expectations. Don't sit at the extreme end of the risk spectrum, because there are actually twin factors that are happening. One is, I think the world has not looked this volatile in a while. The combination of geopolitical events in multiple parts of the world, change in economic policy in multiple parts of the world, and the whole noise around tariffs that we've seen, the world map has not looked so volatile. Although I do believe that as far as something like tariffs have come, the markets have gone up and down, but now they've digested a lot of the noise. But volatility is here to continue. Secondly, we've seen a subdued period of earnings growth in the last 4-5 quarters in India, which we think will start to pick up towards the second half of the year, given the effort the government has done around pushing up consumption, a lot of new orders happening. So I think we inherited, a tricky global map and a little bit of slowdown that should reverse itself as we go to the second half of the year. The structural story continues to be very, very strong. And I would say, as far as the SIP book, look, people have been watching this 26,000 crore number with sort of bated breath, but I think it's been remarkably resilient. Of course, customers that do SIPs will also redeem from those folios for goals, because they want to book profits because of markets. But net, I mean, at least in my tenure of this industry, I've seen this book grow from 4,000 crores to 26,000 crores. And I think SIP has become a way of investing, a way of saving that appeals. So I would actually love to see a big Indian goal at a 1 lakh crore per month SIP book.
Right, here's hoping for that, Radhika. But Radhika, if someone, like we mentioned, that we haven't seen such geopolitical tensions and such volatile times in a while. Now, if someone who's not very good at stock picking, or someone who doesn't want to navigate this volatile market, mutual funds are the safest option, but even there, mutual funds is a very, very large universe to pick from. How does one go about picking the right type of mutual fund? If say, for example, a large cap, small cap, or a mid cap, what should my portfolio allocation look like at this juncture when clearly there are macro headwinds?
So I'll give you some advice, but I think the first thing that people should do is take the benefit of a financial advisor, because I really believe with the number of options in the fund universe out there, and each individual's investment needs are so different that portfolios have to be built more customized. So I really believe people should take help out there. I would give you 3 quick frameworks for different type of investors. For aggressive investors who want to be equity oriented, I think this is a time to be in flexi and multi-cap products. I'm not saying large cap and I'm not saying small cap. This is the time to be in the middle of the spectrum. You don't want to be 100% large cap, because you see earnings growth in the mid cap space. You see a lot of the stories and a lot of the sectors that represent the India of tomorrow, your hospitals, your hotels, your capital goods, capital markets, all of them are present in the mid and small cap space. So build a curated flexi cap or multi-cap fund. It will give you very nice blended exposure. I think for mid investors, moderate investors, looking at the hybrid fund space is very powerful. So categories like a balanced advantage or a aggressive hybrid, these are categories in mutual fund that they're like khichdi categories. They have equity, they have debt, and they do a good job very tax efficiently. And I think for conservative investors, we've forgotten a little bit about fixed income as an asset class,
Yeah.
especially post the change in taxation. But there are very good
Yes.
tax-efficient fixed income solutions out there on the mutual fund platform.
Yes.
Arbitrage, income plus arbitrage that people should look at.
All right, Radhika, thank you so much for that birthday gift, rather, for our viewers. Really appreciate you taking the time out and speaking with us.
Thank you, guys.
But with this, it's time now once again to slip into a very short break. Don't go anywhere. We'll be right back with more on the other side.
पैसा लगाना है